All right, folks, Dave here, and today we're tackling a stock that's been making some serious waves recently, Nokia, ticker NOK. After breaking out of a multi-year slump and seeing some exciting news, a lot of you have been asking, is the bottom in for Nokia? Well, we've done the deep dive, and I'm ready to spill the beans on what we found. So, what's the buzz around Nokia right now? The market narrative is absolutely electric, driven by major tailwinds in AI and cloud infrastructure. We've seen news like NVIDIA's recent investment, signaling a huge vote of confidence in Nokia's role in building out the next generation of digital infrastructure. Management themselves have chimed in, pointing to a robust Q3 outlook with strong order intake in optical and IP networks. It seems everyone is betting big on Nokia becoming a key enabler for the AI and cloud revolution. For those new to the game, Nokia OJY isn't just about flip phones anymore. This Finnish giant provides mobile, fixed, and cloud network solutions worldwide, operating across four key segments: mobile networks, network infrastructure, cloud and network services, and Nokia technologies. Think 2G to 5G radio access, fiber optics, IP routing, and submarine networks. They're serving communication service providers, web scales, and governments globally. While the market is pricing in massive growth, it's worth noting their official 5-year EPS growth forecast sits at a modest 2.12%. This contrast between market enthusiasm and official guidance is exactly what we need to reconcile. All right, let's get into the nitty-gritty, our scenario analysis. First, how do we reconcile this incredible market narrative, the investment, the AI tailwinds, with Nokia's relatively conservative official guidance? It's simple. The market's current TTM/PE of 44.4x isn't based on that conservative 5-year forecast. It's clearly pricing in significant near-term growth from these catalysts, anticipating an acceleration far beyond historical averages. That's our starting point for these cases. Let's break down the probabilities and what they mean for NOK's valuation. First up, our base case, which I'm assigning a 45% probability. This scenario assumes that while the AI and cloud demand is strong, it materializes at a steady, manageable pace. Management stays on track, the Infinera acquisition progresses smoothly, and Nokia continues to benefit from this healthy demand environment. We're talking continued, albeit modest, acceleration. From a valuation perspective, we started with Nokia's current TTM EPS of $0.17. We then projected a modest near-term EPS growth of 10% for the next year, reflecting those initial tailwinds, bringing us to a projected EPS of 0.187. Then we applied a forward PE multiple of 38x. This is a bit more conservative than the current TTM PE, but still reflects optimism for a growth tech company in this space. Multiply those out, and our fair value for the base case comes in at $7.11. I'm giving this a 45% probability because technically, NOK had broken out of that multi-year downtrend and is holding firmly above its critical $5.18 support. This suggests a solid foundation for continued, steady upward momentum. Next, the exciting one, our bull case, which I'm giving a 35% probability. This is where the AI and cloud infrastructure build-out goes into overdrive. We're talking dramatically accelerated demand for Nokia's optical and IP networks, with that NVIDIA investment being just the tip of the iceberg for broader industry adoption. The Infinera acquisition blows past synergy targets, 5G enterprise adoption soars, and Nokia sees substantial margin expansion. Here, we again started with the current TTM EPS. But for this optimistic outlook, we assumed an accelerated EPS growth of 20% for the next year, pushing our projected EPS to $0.204. To reflect the massive market enthusiasm and premium for a key AI infrastructure enabler, we applied an elevated forward PE multiple of 45x, slightly above the current TTM PE. That calculation gives us a fair value of $9.18. The 35% probability here is contingent on a decisive break above the next major resistance level at 870. If that happens, the technicals tell us it could attract a flood of new capital, confirming a strong upward trend. Finally, we have our bear case, which I'm assigning a 20% probability. This is where things get tough. Imagine a broader macroeconomic slowdown that crushes global telecom spending. Or perhaps the promised AI/cloud demand from customers just doesn't materialize as expected. Competitive pressures intensify, and the Infinera integration hits major roadblocks. The market's current high valuation multiple proves unsustainable. For this scenario, starting with the same 0.17 TTM EPS, we projected a 10% decline in EPS for the next year, bringing us to 0.153. We then applied a much lower, more conservative forward PE multiple of 25x, reflecting a no growth or even declining outlook. This lands our bear case fair value at $3.83. Now, for the 20% probability, it's crucial to watch that $5.18 support level. If NOK loses that critical support, the technicals clearly indicate that it could signal a breakdown of the nascent uptrend and a return to that multi-year downtrend, confirming a negative shift in investor sentiment. All right, folks, let's pull up the chart and see what the technicals are telling us. Here's what I'm seeing. Nokia has decisively broken out of a multi-year downtrend channel. This is huge, signaling a significant shift in momentum. The next major resistance level we need to keep an eye on is $8.70. Now, to maintain this newfound uptrend, Nokia has to hold above the critical support level of $5.18. But, and this is a big but, if that $5.18 support is lost, NOK will resume its multi-year downtrend. So, strong breakout, but key levels to watch. So, is the bottom in for NOK? Based on our deep dive, I'm leaning towards a cautiously optimistic, yes, the bottom is likely in, and we're seeing a new trend emerging. While there's always risk, the strong market narrative around AI and cloud infrastructure, combined with a confirmed technical breakout, paints a compelling picture. The probabilities favor the upside, with our base case pointing to $7.11 and our bull case potentially reaching $9.18. We've got tailwinds, we've got a technical shift, but keep those support levels in sight. Considering our analysis, for those looking to get in or add to their position, I'd be looking at potential entry points around the current levels, ideally accumulating on any dips towards that critical $5.18 support. Our base case fair value is $7.11, and the bull case goes up to $9.18, so there's plenty of room to run if these catalysts play out. Just remember that $5.18 level is key for maintaining the uptrend. What do you think about Nokia's prospects? Let me know in the comments below. If you found this analysis helpful, please smash that like button, subscribe to the channel for more deep dives, and hit the notification bell so you don't miss our next episode. Now for the important stuff. Remember, I'm Dave, and this is the Bottom In. This content is for informational and educational purposes only and does not constitute financial advice. Investing in the stock market involves risks, including the potential loss of principal. Always do your own research, consult with a qualified financial advisor, and never invest more than you can afford to lose. Past performance is not indicative of future results.